Welcome back to the Global Business Report. The African Development Bank Group has signed a $4.8 million institutional support grant to the African Union for implementation of the African Continental Free Trade Area Agreement. The grant forms part of a series of interventions by the bank to accelerate implementation of the Free Trade Agreement. Experts say the agreement will integrate the 55 nations on the continent and transform economies. Africa's biggest economy, Nigeria, signed the pact earlier on July 7th after recommendation from the Presidential Committee. Now, the international oil benchmark, Brent crude, continues to decline, trading below Nigeria's budget benchmark price of $60 per barrel. The 2019 budget, which was signed by President Muhammadu Buhari in May, was based on oil production of 2.3 million barrels per day. Late last year, Brent crude hit a record high of nearly $87 per barrel. That development spurred the Federal Executive Council to peg the price of crude oil at $60 per barrel, up from nearly $51 for the 2018 budget. Experts are of the opinion the government will need to review the oil price benchmark downwards. And joining me to discuss this issue at Nigerian stock market is Robert Omotunde, Head of Research at Afrinvest Securities Limited. Robert, always a pleasure to have you.
Thank you. It's my pleasure.
All right. What are your thoughts on the declining oil price?
Well, it's a lot of issues for the global economy, again, because there are two titans, and one trying to show supremacy over the other. I think the issues are, so recently we've seen President Trump also coming out again to say he's still going to impose more sanctions, more restrictions on the goods coming out of China.
That's true.
And China is also responding, by trying to place a sort of a limit on some of the agricultural cargoes coming from the U.S. It's not stopping there. We are seeing other comments from, recently we saw a decline in the yuan, and President Trump was quoted to have said that China is a currency manipulator. Of course, Beijing is also saying that, such comments could have very dire consequences on the financial market. But I think the issue as it relates to the global oil prices, it has to be properly contextualized. So China has about 13% of global consumption. U.S. is higher, of course. I think U.S. consumption is around 20% or so. And the issues on the ground is to say, why should China continue to buy U.S. crude? Crude oil. Why should China respond or listen to U.S. sanction on Iran? On continued patronage on Iranian oil. All of these issues have consequences on what the demand, what demand suggests. And for as long as you have weaker demand, the expectation is that prices will continue to tank, which is why we've seen the Brent crude falling. In a couple of weeks, it has lost over 9%. Even falling up to a seven-month low. And this continued unabated. Again, the China-U.S. trade tension, has very, great impact on what oil prices, could do in the near term. And this also has impact on what happens in Nigeria. On the domestic front. In your introduction, you did read out what the budget benchmark is for 2019, for example, at $60 per barrel. And already we're seeing oil prices falling below this level. What this means is that there may have to be some revision, in terms of what the oil benchmark is. And for the Nigerian economy, especially fiscal finances that seem to be struggling now in the face of so many spending that government has to do, and the huge chunk of borrowing that is following that, that's not essentially a good story for the Nigerian economy.
All right, we're seeing a reverberation of all those market forces coming into play. Very good, Robert. Now, let's take a look at other issues on the grant to the AU for implementation of the African Continental Trade Area Agreement. What impact does this have on African economies and Nigeria in particular, you think?
Okay, so, again, the issue about after, after Nigeria signed, has even gained much more ground because, again, Nigeria is the biggest market. You know, it's true that we have about 55 countries. You know, you have 1.2 billion people. We're talking about free tariff on about 90% of goods, you know, within Africa. Yeah. So that's to start immediately. Indeed. And about 10%, you know, after the commencement of the initial 90%. You know, obviously 3.4 trillion GDP size, you know, that we're looking at. What African Development Bank is doing at this time is, you know, again, it's been the set date for commencement at this 1st July 2020. You know, so there are plans that need to be put in place. So this grant is coming, you know, to aid all of these plans and to ensure that, you know, they achieve seamless success, especially when this commences. Yeah. You know, back home we have several issues, you know, around it. You know, one of the advantages, which is not to say that there are no disadvantages that Nigeria may suffer as a result of this, signing of AFTA. Yeah. But the immediate advantage, you know, is the free movement of goods, you know, of course, and people within this, you know, region, this huge market that's now being made available. But companies, you know, within Nigeria may suffer, you know, at the initial stage. Yeah. Again, after a while, you know, I believe that market conditions could cause Nigeria to be more competitive. Indeed. You know, but at the initial stage, we are not as competitive. You know, people may find it easier to bring in more other products, you know, from the rest of Africa than they will find here in Nigeria. You know, but by and large, you know, we believe that this market, you know, again, even help us to solve some of our domestic issues, you know, around competitiveness. Yeah,
and you mentioned earlier before we came on that the issue of competitiveness, you know, it also helps improve your, you know, your thinking and how to get things done better.
Absolutely.
You know?
Again, because there are so many things going on in the country right now that, I mean, especially on how businesses are run, you know, either because you have a government support or because government is in that sector, you know, we seem not to, you know, allow market principles to drive innovation and activities in the market. So when you have this, you know, it's more or less going to force it on us. You know, it's either we remain competitive or we can lose some of our people. People can, I mean, brilliant brains can leave Nigeria and go elsewhere in Africa where the jobs are available, because whichever of the countries that will attract the most FDI will be where it is easier to do business, right? So, because it's going to be easy markets within Africa. So if it's cheaper for me to set up my factory in Ghana and sell to Nigeria, which is, of course, the biggest market, that is what I would do, you know, because there is AFTA in place. Indeed. You know. So again, it can help us to begin to think deep and force the so-called competitiveness on us.
Very good, Robert. Now, let's still take a look on the oil aspect of the economy. The petroleum products import and consumption data for the second quarter released by the MBS today shows that Nigeria imported 5.61 billion litres of petrol, up 5% from the 4.87 billion litres in the first quarter. What do you make of that development?
Again, that's is further echoing, you know, some of the issues that we have. You know, this was a 5% jump from what we had in the last quarter. All right. And if you look at it, this value comes to about 61 million litres of petroleum, PMS, particularly petrol, about 61 litres per day, if you do the maths, right? So the point, first of all, to make is, do we consume as much, you know, in the country? But you can never know, because there's a sort of that can allow free movement of this produce, you know, after getting into Nigeria, to still live their way, you know, which may suggest that Nigeria is subsidizing, you know, other countries, you know, where PMS prices are, you know, higher than what we have here in the country, you know. And if you put figures to it, it helps us to be able to analyze it. At this level, at 61 million litres per day, if you do the maths, 145 naira is the pump price for petrol. You know, even though we don't know what the landing cost suggests right now, you know, but it's somewhere within the neighborhood of 180 naira. You know, it's not something lower than that. At the shortfall of that, we give you almost 2.1 billion naira of subsidy on a daily basis.
Wow.
If you analyze that, that is almost 798 billion, that we're paying in subsidy on an annual basis. And we need to look into this absolutely, so that we can be able to address some of these.
Indeed, it is a staggering amount. You're right there. Now, how have the equities and fixed income markets performed this week?
Well, we continue to see the lackluster performance on the equity front. On Monday, we had a little bit of gains, and then Tuesday, the bearish run kicked in again. So, and for us, it's not surprising because it's the mood, it's a bear market. And we do not expect that anything fundamental will change this tide. We had expected that perhaps if we saw some excitement with the earnings, we could see some positive movements in the market. But that did not happen, even though we still saw, very positive numbers. So what that speaks to is the fact that the lull in the market is a consequence of generally poor sentiment. Market has very poor sentiment about, not just the economy, but of all the companies that are listed, on the exchange. And until we begin to see some form of policy move, that suggests that we're changing the tide, or there's sort of paradigm shifts in the way we've been doing things, we may not see that positive sentiment. And mark you, when you will say that positive sentiment, it is to be led by these foreign investors, right? And for as long as we don't put our hearts together, they are not likely to come at this time. So equities markets still remain a bear market. What we continue to preach is investors can now start trading on technicals, and that may help you to identify some pockets of opportunities that are available.
All right, obviously something has to be done. Homegrown solution, as it were. Now, in 30 seconds, your expectations for the rest of the week in the equities and fixed income markets.
So for equities, we still expect that the market will remain, we continue on the bearish note.
All right.
But for the fixed income market, we are beginning to see some sort of shifts after we've noticed continuous drop in short-term interest rate. Investors are already looking into medium-term, interest rate for bond yields, and we're seeing that play out. Monday was a positive for the bonds market, even though the gain was reversed again on Tuesday. But we expect that over the short to medium term, there will be compression in yield, which will also give opportunity for those who are already in that space.
Very good. And on that note, Robert Omotunde of Afrinvest, I'd like to thank you for your thoughts on those issues. Always a pleasure to have you.
Thank you for having me.